Let's look at inventory and its substantive procedures. We are still continuing with topic 5, auditing, which is substantive procedures. So when it comes to inventory, the audit approach on the audit of inventory depends on the inventory control system that is being used by the client. And if the client has a perpetual inventory stream, perpetual is something that is ever changing. So if their inventory system is ever changing, then year-end count is not undertaken. And then a control-based approach may be more efficient. Like instead of attending the year-end count, they can just test the controls that are put in place during the inventory count. Yeah. So a year-end count is not undertaken, and a control-based approach may be more efficient as long as the controls over the system are appropriately designed. Then where inventory quantities are determined by an inventory count at the year end, like they always count inventory at the end of the financial year, then there are substantive approaches undertaken. So let's look at the substantive procedures for the year end inventory, like the procedures that can be performed in order for the auditor to detect material misstatements when it comes to inventory. So we are going to be dealing with each assertion one at a time. So completeness. So in order to confirm completeness of inventory, first the auditor can physically count inventory items and trace them to the final inventory list to see if they're matching. Yeah, they can do the counting and then trace it to the inventory list and see if there is an agreement. Then in case there is no agreement, the difference is investigated. So that can help to confirm completeness of inventory. Then secondly, physically inspect inventory held by third parties, that is consignment inventory. So in case the company has inventory that is held by someone else, that is being kept by someone else, the auditor should inspect that inventory and review confirmations received from third parties whether they have agreed that they are actually keeping inventory that belongs to the organization or not. And then after getting the confirmations, the auditor can agree the amounts to the general ledger and confirm it if it's included in the year-end inventory. So this is about consignment inventory. Like you inspect the inventory that is held by someone else, you get their confirmation that they're actually holding that inventory. Then after, you get the amount that was written in the confirmation letter, and then you match it with the inventory that was recorded in the general ledger and confirm if it's actually matching. Then thirdly, can compare the gross profit percentage to the previous year-end or industrial average. So this can help you to know whether the business is performing well compared to the previous year, or if it's reaching the industrial average, or if it's not. Lastly is complete the disclosure checklist to ensure that all disclosures relevant to inventory have been made. Like you check that disclosure list, like what was put in the notes, the explanations and all that. You see if every information that is relevant to inventory has been mentioned. Yeah, so that can help you to confirm completeness of inventory. So those are the substantive procedures. Then another session we have is existency. What substantive procedures can be performed to confirm existence of inventory? So the first one is observe the inventory count. Like be there when they're counting inventory. It will help you to know that that inventory actually exists. Then secondly, select a sample of inventory items from records and then physically inspect the inventory to see if it is actually there in the store. Like select a sample of the inventory that maybe was recorded in the general ledger, and then you trace it to see if that inventory is there in the store. So it can help you to confirm existence. Then thirdly, inspect documentations regarding to that inventory held by third parties, for example, warehouse receipts. So in order for you to confirm existence, you can inspect documents to confirm whether it was really bought. Yeah. Then another session is rights and obligation. Like, how can you confirm that the entity has a right to the inventory that is recorded in the books? So first is confirm that any inventory held at a third party location is included in the year-end inventory figure by reviewing the inventory listing. Like that consignment inventory, that inventory that is held by someone else, to confirm that it actually belongs to the organization, you have to make sure that it is included in the inventory at the year end count. Yeah, you have to make sure that it is included, and if it's not included, it means that the entity has no right over it. Then, secondly, is verify that any inventory held for third parties and confirm it is separately located during the count and is not included in the year-end figure. Like in case the entity is holding or keeping inventory for someone else, make sure that that inventory is separated from the inventory of the organization and it is kept aside. Another way to confirm rates and obligation, you can inquire from management. You ask them whether the inventory belongs to them or not. Then you can review loan agreements and then directors board minutes for inventory pledged. Then another session is cutoff. And cutoff, here we are confirming if inventory is recorded in the correct period. So the substantive procedures here are always the same. Yeah, for every transaction. Yeah, for every transaction, for every system. Okay, here the first one is you note the numbers of the last goods received notes, GRNs, and material requisition before and after, and you check if they were recorded in the correct period. Like you check goods received notes that were received just before the year ended and those that were received just after the year ended, and you check if they were recorded in the correct period. Then you also make sure that goods that were received but not yet invoiced before the period end are accrued in the accounts. Like you received the goods but you haven't paid for them, so they are accrued in the accounts. Then thirdly, you make sure that the sales invoices for goods dispatched after the inventory count, like in case you sold something after you counting inventory, yeah, they should not appear in the statement of profit or loss.